How you doing, everybody? I hope you're all doing great. Stock Option Sniper here. Today, I want to go over imbalances and what's going on. This is not it right here. I had an example with one of my students. I think it was on Splunk. No, it was on Baba. All right, perfect. So I want to ask. I want to share. I want to make it simple for everybody. What is imbalances and how does imbalances in the market happen, right? So basically, I created this example for one of my students. Let's say they were buying, right? They were buying. Let's say they were buying the market here. Right, I want to make sure you create this. You create this. So let's say they were buying, they're selling, right? Consolidation, and boom, a break of structure, which is in our Wyckoff, right? If you don't know what that is, I put that in my other videos. I go deep into that, right? Let's say a break of structure right here, and then a sharp, excessive sell-off, and within that sell-off, there will be an imbalance, right? Delete this real quick. I don't want to confuse anybody, right? And that imbalance, the market needs to fill in that gap. So this purple line, as you guys can see, what is this purple line? I created an example, amazing example right here for us, right? So basically, what does that mean? That's that break of structure. Once we have that break of structure, right? Let's put that break of structure, make it black. Once we have that break of structure, we have an excessive move down. And once we have that move down, it creates an imbalance from this wick right here, from this wick to that next wick within this imbalance, this candle, right? And so this purple is basically this gap. So you see that from here, from this wick to this wick, right? So let's go over that and how we see that in the next live example. I just wanted to make that very clear, what are imbalances and how they look. Let's go over to this example right here. So I have some perfect live example here that I was working on earlier, right? Oh yeah, and by the way, once you fill in this gap, so let's say I'll be right with the live example. So basically, what does that mean? It means usually 50%, right? I want to create that trend line. Boom, right? Basically, there's a gap here, and usually within this 50%, I'm creating a little example of gaps, right? You guys get it? So within this gap, usually 50% gets filled within that. So two things can happen is either the price can go up to that 50% and go all the way down, or the price can fill in that entire 50%, look for another imbalance, and go down even lower, right? So that's basically the purpose of this video, and we're gonna see live examples, right? So I created some, I was looking for some fair value gap right here, and as you can see right here, let me take this out, right? So let's just look at this and see what happened. So as you can see, we have a value gap right here, right there, within the bottom of this wick to that wick, right? Create one here, perfect. Boom, we can extend that, make that blue to make it easy to see in the gaps that need to be filled. We can extend that, right? This is a great example, by the way. So once we have that gap, or whatever you want to call it, imbalances, fair value gap, FVG, right? We have that. I want to make sure it's a little bit perfect for us here. Boom. Once we have that, we've seen that this candle actually try to fill it. So what does that mean? It means that we have price that once we fill 50%, how do we know it's 50%? I'll take my Fibonacci retracement, go from the bottom to the top. This candle, right? Boom. And look at that, 50%. Let's mark that down. Let's make it 50 right here. Beautiful, right? 50%. black candle so we can see it. Take out the Fibonacci. We no longer need it after we find that 50%. Oh, this Fibonacci don't want to go, you guys. This thing is stuck here. Hang on, guys. I'm trying to get rid of this fib right there. You gotta go. Beautiful, right? So once we have that 50%, we know that it's gonna gap. We know it's gonna fill in half of that gap. And what happened? It goes up higher, right? Or it can break down lower. But in this scenario, we're in the 1 hour time frame, and as you guys can see, how would we take the trade? So basically, let's say you fill in that gap. That's your entry, right? Your entry is from within that gap fill. What we can do, right? Well, I want to make sure when we go to the time frame, right? We want this move right here. We want to capture this move. Let's make it purple. You guys, so it's easier to spot later on. So if we were taking this trade, our stop loss will be below that other 50, right? Below that other 50. And after that, our price target, right? Let's make that blue. So we know that our entry is right here within this red. Ignore this purple line. I just put this here so later on, once we go to another time frame, we can spot this area, right? So we have our entry here on this red right here, right? Entry, and then our exit is gonna be next to our other time frame, right? If you wanna put the entry at the candle right here, the high of this candle, why not? The exit, I'm sorry, right here within this candle, yes we can, right? Make that yellow so we can easily spot that later, right? As you can see right here, there's a lot of I like this right here better, right? We have a lot of liquidity up in this point when he went on that move down. So I like targeting here, right around this red area. So let's say we've seen all this move already. We're looking for this target. We know there's liquidity around here. So the price can go up all the way here. If you don't know what I'm talking about here, this is the liquidity where most order lies. I go over that in my other video. So let's say we have a lot of liquidity here. We have an entry here to that 50% gap fill. Once we have that entry, stop loss below that 50, and then we have a target going all the way up just right by when it touches that liquidity, right? So once we do, we go to a lower time frame or an hour time frame. We can go to the 15-minute. We can look for that setup, and we see here, right? Or we can play it at the 5-minute. Boom. See why I did that purple line? Because you have to scroll and look for that setup. Beautiful, right? So if you want to take out that purple, this is our setup right there. Much cleaner, right? We have a fair value gap within that candle, just somewhere around here, right? Within this candle, that run up right here had a whole entire gap. We marked it down with the 50% using our fib. Once we have that, we can take an entry within. We know that was going to get filled, so half fill. We could have taken that, put a stop loss right below, right by the other half, and we could have targeted that previous. It didn't hit our target, but this was a nice move up right here, right? You guys understand the concept and see what was happening. So it was beautiful how they targeted this price and before bringing everything down. Okay, beautiful. So it did not hit our target price, but overall this was a beautiful trade. If you were tracking the trade and putting your stop loss right around these areas, that would have been, if you were tracking this trade and raising up your stop losses, that would have been a beautiful trade, right? Profit level. But as you guys can see and understand the understanding of the fair value gaps and how it's played and why it's formed. That's basically the whole topic of this video. Right, so let's go back to some of more of our example. As you can see right here, right? So now we have an entire marked up right here, right? This is a whole new example. Now we went as a markdown, right? We went all the way up. We had gaps that needed to be filled around this area. So what do we do? Well, this was Baba has been on some. The market has been on. It's a gapping move. So right now, let's try to work with what we have. So we have gaps here that needs to be filled. Now we have gaps here that needs to be filled. So what do we understand here? Well, right now the market literally just went from a redistribution. If you understand from the Wyckoffan method, right? So it started redistributing and went down even lower. Now what can we see here? We can see a reaccumulation, right? Reaccumulation and accumulation, right? I break that down also, right? We have an accumulation, we have liquidity around this area, right? Let's make this black, and liquidity is lying down around this area, right? We have individuals looking to go long, stop losses here. Let's make this green, beautiful, right? So what can we see here? Well, we have a gap that needs to be filled right here. So what can we see? We can see price, get that polyline, we can see price going higher within that 50%, right? Once we see that 50%, we can see going down lower, mitigating all these prices. I have a video on liquidation, you guys. So we can see price going all the way here. I want this to be black, I want to be green, make sure we can see it, right? We can see price going lower, right? Or we can see price not having to fill that. We can even see price going all the way, filling up this gap 50%, right? Or then going even lower to mitigate everyone here, right? Or everyone here that's taking these trades or filling this gap fill right here. But as you can see, we have a concept on how to trade these fair value gap and the imbalance and see what's going on. Or we know that we can even take prices higher here, right? We know there's a lot of liquidation around this area, right here, right? Liquidity around this area, right? There's a lot of people that try to take calls around here, but literally faked out. If you can see right here on a lower time frame, you can do the Wyckoff distribution method and see it on a lower time frame and break that down, right? You see that. There it is, you guys. Right. Gotta be a surgeon doing this. Right here. Right? We have buying climax right there. You guys want to break that down? Break it down, right? I don't know why, like I said, I don't know why this market keeps on gapping down. I dislike all this gap down. It makes it very difficult, right? We have selling. Hang on, you guys. So we have your PS. Why am I not writing? Right? We can label here. We have our PS. PSY. Sorry. Right? Preliminary supply right here. Right? We can have here supply. Hang on, you guys. Apologize for that. Preliminary supply right here. We can have our automatic rally. Preliminary supply. Sorry, I like this better. AR. Gotta play around with this, you guys. Gotta work. You gotta practice your craft. Make sure you master your craft. Train your eyes to see these right here. I like this better. You see everything, right? Boom. You can even say right here, right? It's a break of structure, right? Sign of weakness, or there's a lot. There's Wyckoff everywhere, right? You can even have it here. Boom. Right? We can make this yellow from before, blacks. Be using this example. Right? We can have the sign of weakness here. We can even see a break of structure here. Or we can even see here, right? Break of structure here. There's a lot, you guys. That's why you have to You have to practice. You have to practice your craft, right? Preliminary support, automatic rally, breakdown, sign of your weakness. Like you guys, you have to literally practice and practice this, because once you mess these up, you mess up your phases. Now your entire trades are messed up. You're wondering, like, yo, what happened? I thought I had every. You have to practice and practice, back test every time, right? Then you have your UTAD right here. But I break this down thoroughly, right? UTAD, you have your up thrust after distribution, and boom, for some apparent reason, this gap down. But you have all that understanding in the lower time frames and how to trade them, right? So you can see this in a higher time frame and literally break it all down in the lower time frame. Okay, my computer is loading here anytime now, right? So you can go to your higher time frame, look for the setup on your fair value gap on the lower time frame in risk manager, right? The things about your trade, the only thing you don't know where the market is really going to go. To be honest, we are not market predictors, right? We don't predict where the market is going to go, to be honest with you. What we can do is only set up the trades and risk it. That's what makes it a great trade, is us managing the risk of the trade, right? We don't know. Can the market go all the way up here? Yes, absolutely it can. But what if it doesn't? All you can do is manage the trade. But I just wanted to share with you guys that I want to share you guys the market imbalances up to this point. We're talking about market imbalances. We have the Wyckoff within these trades. We have the accumulation. We have the market phases and understanding how what the market is doing, what phases the market in. Within those trades, we go over the Wyckoff method and the strategy and how to trade those accumulation and distribution and the markup and all that good stuff. So, and we also have liquidity. And up to this point, we're understanding and putting them all together, all these strategy. So use them, you guys. Manage your trade very well. Yeah, enjoy the rest of your day, you guys. I appreciate you guys for tuning in, and have a great day once again.